Listen, we only get one shot at this.
Why not live life on our own terms? Hey everyone, it's Tom Kradza, and on this episode of the Your Life, Your Term show, it's a blast from my past because Todd O'Donnell is coming on the episode to talk about all things insurance. We just talk about life. Todd, actually, I'll just let you know right now, he's one of the guys that him and I conspired to quit our jobs, get ourselves on breakfast television, and actually quit on live TV. We were going to start this conference that was all about entrepreneurship and business building and how, jobs were not the path to success. And at the time, we were working with another person who works alongside us here at Rockstar, Ruben Furtado, and he was part of that. He wasn't actually going to quit with us, but he was kind of he was aware of what was going on. We were all at Oracle at the time. So Todd, I've known for a long time. I guess it's going to be almost 20 years I've known Todd O'Donnell. He went off and started a State Farm agency out in Cambridge. Now he has 2 offices, recently bought by Desjardins Insurance. So we talk about our past, what we went through, why we wanted to quit our jobs. Then we get into some real estate insurance topics, what investors need to know about getting the right insurance for their properties and that sort of thing. All around great guy. You might hear me being a little hard at him at the beginning. It's just because we're good friends and I like the guy. So that's how we talk amongst friends. So you're hearing a real life conversation. And we'll leave it at that. And if you are listening to this and you want to join the Rockstar Inner Circle membership, we have something new going on. You can check out all the benefits at rockstarinnercircle.com/member. So that's rockstarinnercircle.com/member. And we have a new promo code for you, YLYT, which stands for Your Life, Your Terms. That's YLYT. If you use that, you get $200 off the initiation fee to sign up as a Rockstar Inner Circle member. So you can find out all the benefits at rockstarinnercircle.com/member. That's rockstarinnercircle.com/member. And if you use the code YLYT, doesn't matter if it's all caps, lowercase, it'll work both ways. YLYT will save you $200 off signing up as a Rockstar Inner Circle member. That's it. Let's get on with the show.
Are you ready to live life on your terms? Is it time to take charge? Real estate, business building, the economy, health and nutrition, and more. It's the Your Life, Your Term show with Tom and Nick Kradza. Are you ready? Let's go.
We are live with Todd O'Donnell. And yeah, you do have a great voice, dude. Yeah, just for everyone listening here, Todd, I said, Todd, when you come on, it better be the best podcast ever. And Todd's like, well, you know what? I do have the voice.
Yeah, there's a bit of a longer story to that one, which we won't get into today, Tom. But
are you trying to enhance your voice right now? Listen, I just want to go back to Oracle when I was a much better salesperson than you. Todd and I used to work together, and my sales skills greatly outmatched your sales skills at Oracle. And I forget what patch you had. Where did you sell into before we sold into Canada?
I sold into Kansas and Missouri.
Yeah.
And you had Chicago.
I had Chicago.
Yeah.
Yeah, I had Chicago. I had great counts.
Yeah, for those people out there know what a bluebird is, we were just talking about Tom lived on bluebirds.
I didn't live on bluebirds. Not everyone knows what a bluebird is. Yeah. A bluebird is a deal that you win.
They didn't really know about it.
So I worked really hard. I did get some bluebirds. But where I did well is I could speak tech.
Yeah.
So I could speak to the CIOs directly and tell them that Oracle was ripping them off in different ways and to buy this instead of what they had. And I made a lot of great sales. So it really wasn't that I had a fat patch, Todd. It was that my wealth of experience and knowledge in the database industry really came to serve me. All the suffering that I had working in the tech support department for multiple years came back to serve me.
Absolutely.
Where you just got the sales job. You didn't even know what you're selling. You were just reading off a piece of paper.
I never did.
God knows what you sold. God knows what
I sold them licenses, Tom. Licenses.
Someone was asking me that the other day. They're like, how did you know what you're selling? And I said, well, the majority of the sales force, all of us, we didn't really know. They just put a piece of paper in front of you. And when we found out the software didn't work as advertised, like a year later, when your customers would call you back saying, well, it didn't work the way you said it was going to work. We didn't know. We were just told it was going to work a certain way. You and I sold it, and then it didn't work.
That's right.
It was vaporware.
That's why we had consultants, right?
That's why we had the consultants. That's why the consultants loved us so much. Right. But the Oracle was also the birth of 9to5sucks.ca. Did we register the URL?
I think I did. So I was just going through some old notes. So do you remember we actually had booked a hall at the Metro Convention Center? Do you remember doing that?
Yeah, because we had Harv Ecker.
Yeah, was it Harv Ecker
Yeah.
or Alan something or other?
I think we had a few people.
Okay, and so I remember you, me, and Ruben drove downtown, booked this place, and then we came back. I remember Jason DeZormer, who was our boss at the time, he's like, "Where the hell you guys been all day?" So we booked this venue, and we're going to have Harv Ecker and whoever else, and it was going to be one of these events where they're selling their product and we got a piece of it. So I was going through my notes yesterday. It was exciting, and then I turned to the next page, and I'll read. I think I had a book.
Why? Because before you read the next page, because I think you probably blamed us not proceeding on me.
No,
I think you blamed us not proceeding on me.
So part of this was, remember, we were going to go on. The idea was we were going to go on breakfast television and quit.
Yeah.
Yeah, we were gonna quit Oracle live on breakfast television. So we had I'm reading this page. I was like, we had great ideas. The event, we're gonna be affiliates. Seminars, and then I flipped to the next page. Next steps: delay hall. So we gotta unbook the hall. So obviously something happened between this page and the next. So
I remember calling Harv Ecker's office. So for those of you who don't know Harv Ecker, he was really big. I guess that would have been probably around 2005. We were doing this.
2004. Yeah, 2004, 2005.
And Harv Ecker was coming out of the west side of Canada, and he was a big motivational, personal development kind of guy. And I called him saying, "Hey, we'll represent you in Ontario."
Yeah.
They're like, "Who are you?" I'm like, "Well, we're just these guys that were working in this tech company, but we want to quit. We'll represent you. We'll do all the marketing for when Harv Ecker comes to Ontario." And they agreed.
Yeah.
And I remember running around the office at Oracle saying, "We got him, we got him, we got him." I don't know if we booked a hall before or after, because we got a couple other guys.
Yeah, yeah.
And then I don't understand why we didn't proceed, because you're right. I forgot we were going to quit live on TV.
Yeah, I don't recall exactly what happened. I think we just sort of started thinking about the magnitude of what we were doing. I had young kids, you had young kids, and I think it was just a bit much at the time, right?
Yeah. Do you remember when Ruben was working next to us running his spreadsheets? Like you and I were doing all the sales, and he was just reporting on spreadsheets, making all the commissions.
Yeah. Yeah, we made the calls, blitz calls on Wednesdays. Remember that? Yeah.
Blitz calls on Wednesday. Yeah. Oh boy, what a world. You know what? How much did we learn though from sales?
Oh, you know what? Like I look back, you were right. You knew what you were selling. I had no idea what I was selling. I didn't care to know. But the training we got, like it was going through my notes again, like Winning Inc. and all that sales training we had for free. And they were paying us actually, and we were getting this training for free. So, and I worked for IBM before, like all this free training I've gotten over the years, like it's, you can't, the money that was spent on us to do a job that we
couldn't
couldn't really do well.
But the commissions were high.
That's right.
I'm amazed. You have notebooks on everything you did?
Well, no. So
what do you mean no? There's notebooks right in front of me.
I'll give you history. So this is an old Moleskine. So my brother gave this to me. The first
Why
day.
Are you telling everyone it's a Moleskine? Are you trying to be sophisticated right now?
Well, because they're cool. They're cool books. So I got my first date here, August 9th, 2004. He probably gave it to me a couple of years prior to that. And then the last date in this one was sometime in 2014. So it took me 10 years.
Dude, you don't have a lot going on.
No, God, no. From between, yeah. So obviously I didn't have a lot going on. But then I now use them now. This one here I've started, this is in January of this year, and I'm almost done. So I've probably gone through 5 or 6 since 2014.
Well, how did it work? I left Oracle. I went to NetSuite. Where did you stayed at Oracle?
I stayed a little bit longer, and I don't know if you remember, I'd started that wine importing business on the side.
Yeah, that's right. I forgot, because then you made the CDs.
Yeah, I made the CDs, the Drink Professor. Yeah, that's right.
Yeah, you were the Drink Professor.
Yeah, I got 500 of them in my basement. Do you want to buy one?
Hello, Canada. If you haven't met the Drink Professor yet, you're staring. He happens to sell insurance now, but he's also the Drink Professor.
That's right. Yeah, so I went, from there I went to Sleeman.
Oh, I forgot about that.
Yeah.
I totally forgot about Sleeman.
Yeah. And that's actually how I ended up being a State Farm agent was this was a couple of years later, we were getting bought out. So I had my resume out there, and I got a call from a recruiter at State Farm. And she says, "You know what? The only reason I called you is my dog's name is Sleeman. My husband loves Sleeman beer, and I saw it on your resume."
Dude, you're an insurance agent because
13 years later,
because of a dog's name. What made you get into insurance? A dog's name got me into insurance.
A dog named Sleeman. Yeah.
And what the allure to you was, first of all, wait a second. Why were they calling? these are franchise. No, how does it work? You're an agent.
So it's
for...
I'm an agent for, well, it's now Desjardins. So I mean the closest model would be like a franchise, although it's not. So yeah, they were looking.
Thanks for the analogy. There.
Yeah.
it's a franchise, but really it's clearly not.
Yeah, it's not. So yeah, they have recruiters looking for people who want to run their own business. So I had this call and it was like State Farm Insurance. I was like, God, I don't want to work in insurance. And then she just got chatting. Hey, it's your own business. Here's the potential.
Because you're an agent. It's kind of, I think, like a brokerage in Ontario. To sell real estate, you have to join a brokerage.
Very similar.
So State Farm was almost like the brokerage over you, kind of.
Yeah. So it's it's like it's a partnership. So they're the insurance company and I'm the agent that represents them. So we only represent. Not State Farm anymore. It's Desjardins, but we only represent them. So I don't have other companies that I deal with.
Yeah, got it. And then the sales pitch to you is it's your own client base. You control your own hour. It's basically your own business.
It's your own business with the support of a multi-billion-dollar company. So, yeah.
What kind of support? Don't give me the sales line. Don't you just give me a sales line?
Well, think of any
what kind of support are they giving you? You had to hustle all your...
Oh, yeah.
Yeah, okay, so what?
But the brand name, I mean, it's a lot easier saying, hey, it's Todd O'Donnell calling from State Farm versus it's Todd O'Donnell calling from Todd O'Donnell Insurance.
Yeah, okay.
So, yeah.
Yeah, but that's what brokers do.
Yeah.
So I got it. Okay. Yeah. Okay. Yeah. All right. You're one of those. You wanted the big name behind you.
That's right.
But they also had the products to sell. They had the insurance. You can't go on your own and sell.
Oh
insurance.
yeah. No, they had a great reputation. I mean, you watch any sporting event, State Farm was all over it. So it was nice having that behind us. So.
Didn't you dress up as the State Farm bear at some parade or something like that?
I had somebody else dress up as State Farm. I drove the State Farm PT Cruiser.
Oh, yes. Oh, sorry. I didn't know you were driving the PT Cruiser.
Yeah.
I really prefer if you were inside the bear costume. Mm-hmm. I think that's commitment when you're trying to get new customers.
Yeah.
So, okay, you have to get your clients. You're at Sleeman. You decide to tell, because you had kids. No. Yeah, you had kids already.
Yeah, both. Yeah, both my sons.
So what was that discussion like when you were talking to Tara and you're like, hey, I'm going to quit?
So I'm going to say Tara because she listens to this. She's going to go, oh my God, Tom called me Tara.
You know what it is? I know Tara's and Tara's.
Yeah,
and
I know.
I can never keep it straight. Tara.
No worries.
Tara.
So the discussion was, I mean, she knew I wasn't happy and, I've always been an entrepreneur at heart and good friends of mine had a friend up in Peterborough that was an agent that was being, he was very successful. So I had to chat with him and they make you write this test. It's like, I don't know what it is. If it's a personality test of some sort, you got to pass that first. So pass that, and then it was.
Does anyone fail that, Todd?
They do actually, believe it or not. Yeah. Right. They used to.
Just checking. Just checking.
Thanks for the confidence, Tom. So then I get into what they call the agent pool, and then it's deciding on a location. So that's when the real discussion started because we were living downtown Toronto, and my offices are now in Cambridge and Guelph. So.
So you were in a great spot right off the Danforth there.
Like we were actually just there yesterday. Just had a look.
No way.
Yeah.
How was it going back?
It's sad because the condo's getting built there, so it's been
right where your house was.
Yeah, it's getting knocked down, so it's been unoccupied for about 2-3 years. So it's kind
your house is unoccupied.
Yeah. It actually had squatters. Yeah.
No way.
Yeah.
That must have been completely freaky.
It is, yeah. My kids. I was actually there a few weeks ago with my two boys because we were picking up some furniture from a neighbor that had passed across the street. And the number we had bought for the front door was there. So they hopped the fence to try and steal and pull this thing off, but it was screwed into brick, so they couldn't get it. But it was sad seeing that it's
Yeah, totally. I wonder what that house. Okay, so yours is obviously gone, but I wonder what an equivalent house sells for now. Any idea?
Geez. I mean, that was it was a wide semi. Now a busy street, but it had a good lot.
It was a great area.
Easy. I don't know, $1 million and change.
Do you remember what you bought it for?
So in 2000, I paid $236,000, which was $6,000 over my budget. Wow. Can you imagine that? Downtown Toronto, wide semi, 3-bedroom, and
Keith, are you listening to this?
We sold it in 2007, late 2000, for $455,000, and then now, it would have been $1 million.
Yeah. But you guys are so when you looked at areas, you decided because I guess that is the big point. How much of a geographical area were they offering?
Oh, we could have gone to Ottawa. We could have gone to Niagara, Toronto, Mississauga.
And it's not and it's probably not a land area. It's probably population based or something.
Yeah, they did based on population. How many?
You basically draw a circle on a map, or they do, and say this one's available.
Yeah.
Okay.
Yeah. So for us, we had young kids. We were on a busy street on the Danforth, and we thought, let's just get right out of the city. And we met at school. We met at Laurier in Waterloo, and
Cool.
That was it. We didn't know anybody, really.
I didn't know that. You guys met at Laurier?
Yeah. I met Tara at Laurier.
Yeah. Tara. I know it's Tara. Dude, I know. Listen, I know a bunch of Taras and Taras. Tell her I apologize for the...
It's been a few years.
Oh, my gosh. Yeah, now you just got me thrown off on that, Tara. I'm like, how did I mess that up? Anyway, Tara, I apologize for that. On the Cambridge... No, so you guys moved to Kitchener.
Yeah.
Aiden was about to go to Laurier.
Oh, really?
Yeah, Aiden was going to go to Laurier. He ended up choosing Western, but it was really close because I think he thought Laurier was a smaller campus. He thought that was going to be kind of cool.
Yeah.
And then you moved to Kitchener.
Yeah.
But your office was in Cambridge.
Yeah, a bit of a long story. I originally was supposed to open up in Kitchener, but some of the local agents caused a bit of a stink. So they said, hey, Cambridge looks like a better opportunity. So I trusted the company, and it ended up being in the long run.
Was there someone in Cambridge already?
Oh, yeah. I mean, there's 5 or 6 of us, I think.
Okay, got it. And Desjardins, they're following similar rules. Nick's coming in, so we're just going to...
Yeah, I don't know population-wise if they're following exactly the same rules, but in the U.S., there's more State Farm agents than McDonald's. So it's, I think, every 10,000 people, they want a State Farm agent. Or they did back in the day.
Okay, got it.
Desjardins, I'm not 100% if that's what their model is, but they're looking at growing. So, I mean, they want more agents.
Got it.
If you're looking at changing careers, Tom, I can...
No, I'm just curious. I know how that works. And before I ask you the next question, I just want to catch Nick up to speed. Nick, we just finished talking about what a great Oracle sales rep I was and how Ted, no, I called you Ted.
Oh my God.
Todd, it was a long weekend. I was explaining to Todd that it's been a long weekend that we had a guys weekend up at a friend's cottage.
It looks like it was a guys weekend.
And I'm still suffering, but so sorry about that, Ted. I won't I'll do that again.
I'm looking at Todd's shoes. They're blue and brown. But then I realized they go with your jacket.
Yeah.
So, So I kind of lost my voice this weekend too.
Yeah, it was a little bit of a rough weekend.
Did you guys tell everyone? I was thinking about it. And did you guys tell everyone about your 9 to 5 sucks signs?
Yeah. In there. Oh, yeah.
Okay, good.
And I forgot, though. He just reminded me that we were going to quit on... Somehow we were convinced we were going to get ourselves on breakfast television. And we were going to quit.
It's not that hard, I think.
Yeah, especially I think if we were going to quit live on TV.
Oh,
we
yeah.
We were going to quit.
Yeah.
And that was going to be our promotional stunt for the 9 to 5 Sucks event.
That's right.
Which was, we had the hall booked. It was the convention center downtown.
Yeah.
Room of the convention center. Yeah. And we had Harv Ecker committed. And then Todd checked his notes, Nick, just so you know, and we didn't proceed. It just said delayed on the next page.
Delay hall.
So I didn't quit. Todd didn't quit. And then I think I got mad at Todd. I left Oracle. I went to NetSuite, and he got mad and went to Sleeman, and that's how that was. No, but back to when you start in insurance, they give you nothing. So before you open the office, you had to go door. Like, what was the strategy? I feel like I remember you door knocking. Was it 100 doors, 1,000 doors?
Yeah. So the model back then, so we were, a scratch.
I rarely have to turn the volume down though. But hold on, for your voice, let me just
sit close. Sit up straight. So we were a scratch agency, so that means you start with nothing. So they had a model of they wanted you to have what they call 1,500 X dates. So what that means is 1,500 people that have said, yes, give me a call when you open. So I was training in Aurora. So I think at this time we were kind of half still in Toronto and a sort of half moved while I was training. So I was in Aurora. I'd hop in my car right after training. So at 4 or 5 o'clock on a Tuesday, I would drive to Cambridge, knock on 50 doors for the night, get my X dates, either drive back to Toronto or stay in Kitchener. So we did 15. So I probably knocked on, if I had 15, probably, 3,000, 4,000 doors, maybe more, because you get a lot of no's, you get a lot of people that aren't home. Now this is 13, 14 years ago. So it was people were a little easier, I think.
Yeah, but even then it was still, door knocking was still not looked upon highly. Like if
there is even less now though, like 13 years ago.
Yeah.
I used to get the odd person coming to my house. Oh, maybe it was COVID this year. Maybe that's why I'm realizing it in the summer.
Yeah.
Because I think I've only ever answered the door this year to one person trying to sell me something, which is really low.
Yeah, it's not a high success rate, but I wasn't selling anything at the time. It's just like, hey, what's your name and number? Can I call you when I open? And the thing that sucked, I was doing it in the winter, so it was January, February. So just so you know, if you ever do this, pens don't work when it's that cold. So I had to use a lead pencil. So it's actually just after I opened, Tarek.
I'm glad you got over that business problem pretty easily.
Well, you try that. Somebody's giving you a number. You're excited. You're like, shit, the pen doesn't work. But anyway, Tara eventually, after I opened, I wore, just because it was always dark in the winter, it's dark at 5 o'clock, and I had a black jacket. So I wore red gloves and a red toque, just so, give a little bit of color. So Tara actually framed that. It's in my office in Cambridge.
I like how you planned that.
Yeah.
You planned the red hat and the red toque, red gloves.
But we have people listening to this who definitely want to quit their jobs and do different things. I don't understand the motivation that would get you to drive from Toronto, east side of Toronto, to Cambridge and door knock. What was the driving motivation? Like, how bad did you hate Sleeman? And then, or I'm not just trying to pick on Sleeman.
So I didn't hate Sleeman, but I was working for somebody else, and this was an opportunity to work for myself. And we were moving to another city. Tara did not have a job lined up. It was basically burn the boats, and we're all in on this. So if I didn't do that, we weren't going to succeed. So it wasn't a choice. I just had to do it.
Were you looking into the future at all, or was it just I didn't like working for someone else, I wanted to work for myself? Because I remember when I was telling Carol, and I think I had this discussion with Nick, but Nick, it was more of a negotiation with Carol. I literally drew a little line graph saying, hey, when we quit, and I leave Oracle and then, NetSuite, my income's going to drop pretty dramatically, but hopefully then it plateaus and then it recovers and we pass the progression that I would have been on. And that was my little kind of persuasion technique. That's all I kind of
drew a wave. And that was it.
Yeah, I drew a wave. It was a very persuasive wave. And that was me looking into the future. Because I remember thinking, if I keep on the path that I'm currently on in life, I don't look like the way I look personally in 20 years. Because I remember it was like, really early 30s. And I'm like at 50. If I have to beg and plead for 2 weeks vacation so that they don't give away my accounts to the hungrier sales rep that doesn't take the 2 weeks of vacation, you might as well stab me in the leg, because that's not the life I want to live. So that was kind of, I was looking at that.
Yeah. So it sounds almost identical to the conversations we had. I was at that same point where, you look forward and you're like, geez, like, and you watch, I was in software and, and then, the beer business, and there's not a lot of money in the beer business. So going back to software, and, there's a lot of money to be made, but what happens. Guys are somewhere 2-3 years and they're somewhere else, and looking forward, whether I'm 50, 55, is that really what I want to be doing? And financially, am I going to be where I'm at, or, where I want to be? Same idea, projections. Hey, Tara, this is what it looks like. This is what we're going to do. And then just went at it. I mean, again, I had no choice but to knock on those doors.
How naive do you think your analysis was? Because I look back now and I'm like, when Nick and I, it's 3 months in, I think, Nick, do you remember that June? So I quit officially in May. So it would have been the next month. We lost 9 deals in a row. I'll never forget this. 9 deals in a row. And now 9 deals is not a lot of deals for Rockstar, but at the time 9 deals was a huge amount of deals, and we lost every single one of them. And I think it was Nick that was actually showing more concern than even me. This is how intelligent.
Meaning there was multiple offers. Right. So like that's
we tried to work with investors to buy properties. We all lost all the deals. And that meant also there was no commissions coming into us. And I remember Nick and I looking at each other, leaving the office late. It was already dark out one day. And I don't know if you said it, Nick, or I said it. I think it was you saying, if we don't start making some sales soon, I guess maybe I said it. I don't know how it went, that, we're going to have some financial problems. And that's when it really kind of sit in. But you don't even have enough time to rest. You just get up in the morning and you get back to work.
Yeah. So, I mean, the one thing, and I think I actually might have got it from you guys, and that might have been one of the reasons why we didn't quit for that 9 to 5 sucks thing, is, it's awfully hard to get a mortgage. It's awfully hard to get any kind of financing when you don't have a job. So the one smart thing I did do was I had a large credit line set up when we did move to Kitchener. We'd made some good money in our house in Toronto. So I lived on credit line for literally 18 months. That sucked, but again, I was all in. There was nothing I could do. So
that's still the most ridiculous thing. Because you think, now I know early on, right? Early on, but I mean, I'm talking about established people with businesses or they're, self-employed, or whatever. If they show that they can handle their money and they have good credit by that point, to me, I would have less risk lending to those people rather than someone with a T4 that you don't know what the hell they're doing at their job. Just because they have a T4 and they're employed someplace doesn't mean they don't go into the office every day and give the boss the finger, and it's only 2 more days until they're going to get fired. You know what I mean? So I don't know why the banks look at people that are like, hey, look, I'm going to be self-responsible. Because that's one of the first things they're showing is like, hey, I'm responsible. I can handle my finances because I've been making things work on my own anyways. So I would rather bet on that person than the person that is like, if I had my choice, that is just kind of with this T4 and you have no other information other than like, oh yeah, they do have a job. That still blows my mind to this day. I don't understand where the bank's coming from with that stuff.
It must be, I'm just thinking, if I'm the risk officer at the bank thinking this through, I'm like, I guess it's just because if you're self-employed, they don't trust they can get any good data from you, and that's it? Because maybe the thinking is, this guy is a hustler and he is going to produce money.
If you work for whatever, the accounting firm that's in the building here or something, right? I mean, how do they know how
solid
stable
that company is?
Yeah. Like, just think of, during COVID, how many companies were impacted and how many people were laid off immediately, and not, and I know that's an extreme example, but you just never know what's going to happen and what's going on with that company. I think personally, I'm like, it must come, and I have nothing to base this off of, but it must come from, just old policies when a higher percentage of people worked for larger corporations where that typically they didn't really, and there was more union jobs and where they were more stable and those corporations stuck around longer versus a kind of more divided economy where there's a lot more smaller companies and people doing their own thing. And the banks just have never kind of really updated that. I'm sure that's like way off, but I'm just like, I can't make logic of it any other way.
I don't get it either. Yeah, I don't get it either.
Where's Dave Butler?
Yeah, we'll bring it. So just on that note, I'm curious. What is the number one insurance policy requested by people who are self-employed?
Well, the number one is the regular commercial general liability policy.
Do we have that?
You have.
Oh,
that.
do we?
That's
Thanks, Todd. Thanks for covering.
And that's if you get sued. That's what that is, right?
Okay,
so, because a lot of the time, I don't have anything. I'm a small business. I don't have. It's not the stuff. It's not the computer and the desk that you have to worry about. It's you do something and somebody sues you for $1 million because that'll set your family back forever. You'll never recover.
Got it. Okay, so that's the first thing, and then after that, then do people jump? What's the next for self-employed? Let's just stick with self-employed for a second. What's the next most popular thing? Would that be? Let me guess. Is it? I'm going to say critical illness.
Usually disability would be the first one. So that's that replacement of income.
Okay, can you describe the difference between disability and critical illness?
Yep. So disability is like an ATM in your basement. If you had an ATM that gave you $3,000 a month, would you insure it?
Yes.
Sure. Well, you're the ATM, so that replaces that $3,000 a month. So you can't work, you get sick, you get hurt. That's going to give you a monthly income.
And the way
was your sales line? That's the sales line that you come after all these years. That's
it's
it
a
now.
simple way to
Can you
explain
tell
it,
how many times he's used that? By the way, he crossed his arms and just looked at us.
And waited for your response and then glared at me because I didn't respond.
Yeah. And I'm like, okay, Todd, I guess you insure. If you have an ATM in your basement, I guess you insure.
It depends. Does the ATM spit out Bitcoin or gold, or does it spit out fiat currency?
Well, I can spit out whatever you want. I see some Bitcoin books in here, so you got, whatever you choose. But that's just an easy way to explain. That's your monthly income. Critical illness is a lump sum. It's here you go. Here's whatever, $50,000, and then that's it. But you could still be working. You can still get a critical illness payment, but still be working.
Okay, got it. So critical illness then is for someone like me who's going to keep working. It's going to be better.
Depending. Yeah, and it depends on what business you're in. Like if the business can run without you being in there every day, then disability may not make as much sense. But you say it's a plumber, and it's a one-man show, then disability would be the one that kicks in.
But if someone doesn't take the income personally and they pay themselves via dividends, which are a lot of business owners do, then does the income replacement count or no? You have to actually be taking a salary, like a weekly kind of paycheck.
So traditional disability, it's, back to your T4 statement is if you don't have that T4, well, then you don't qualify, or you only qualify for this much, even though you're probably making, this much. But there are policies out there that are designed for a business owner. It says, okay, what's your gross? We're going to give you 50% of what your gross is. That's what you're eligible for, even though you might show $5,000 in total income for the year.
Got it. Okay. Yeah. Okay. So self-employed general liability, was that what it was called? General liability?
Yeah, commercial general liability.
Commercial liability, general liability.
Yep.
Disability, critical illness.
Yep.
Those are the big three probably for
Those
self-employed.
are the big three. Life insurance, if that's not something they've set up. Benefits, if they've got the cash flow, they might want to look at benefits.
Yeah, life insurance, benefits.
I told a business owner asked me recently for a second opinion on his general liability for his business. He's around here.
Yeah.
I told him to call you actually. Because it seemed high.
Yeah,
so
we just dealt with them this week.
Oh, did you? Okay, cool.
Got him looked
at. That was nice. You referred Ted over to him?
Just so you know, I just want to point that out.
Yes,
all right?
I appreciate it.
Yeah, my pocket's right here for anything that needs to go inside
over
my
on
pocket.
The shelf,
Nick's earning points, but you missed it. Keith's not on the camera right now, but Keith's controlling the cameras right now. Keith got insurance for his new condo, and he said
through Ted?
No, he said Todd didn't give him. Sorry. Oh, that would be your mortgage insurance, probably. That would be your mortgage insurance. That's different. Okay, so Todd, there's still hope. There's still
we
hope.
Might have done it.
Well, after this, we'll check to see
Yeah.
where Keith got his insurance. Okay, and then what about people who are earning T4 income? I guess the biggest thing they're coming after, aside from auto and house and that kind of thing, would be life insurance.
Yep.
Either a whole policy, term policy, one of the life insurance products.
Yep.
Okay, I'm not missing anything.
Well, I mean, we as a company, we actually do vehicle finance. Like we do a lot of stuff. We do, investing as well. But, on the insurance side, yeah, it's typically.
Don't talk to me about your mutual funds. We're not getting into it about the mutual funds.
I know. Yeah. Press hard, all 3 copies, please. Thanks, Tom. Yeah, like our core business is P&C. So it's the auto and the home. That's where we start. And then, we typically have good discussions with our clients and it leads to other things. So whether it's life, disability, critical illness, an RESP for their kid.
Yeah, got it. And all joking aside, I think the biggest thing that you have been great with the investors that we work with has been the way you've kind of responded to them when they've need different assistance and following up with them. And is that a differentiator in the insurance business? Because if you're selling similar products, I guess you guys are saying it's the service level that is going to matter to you?
Yeah, I would say, and I know everybody says, well, we have great customer service, but I think we truly do. And I think, especially when you guys got started and, even with new investors is, just holding their hands through the whole process, especially if they're buying their first investment property. As you guys probably know, they're nervous, right? So it's just having the right conversations, just making sure they're comfortable and they know, okay, what am I covered for? What am I not covered for? This is what we recommend. What do you want?
So we had an investor, Nick, I feel like it was 10 years ago, house burnt down. Tenant was trying to install a water softener. I'm pretty sure it was Todd who insured it. Tenant was trying to install a water softener in the basement. They got out the blowtorch. They screwed up on the installation. They burnt the house down. Yeah. The entire house is down. Everyone's safe, but the house is burnt to the ground. Can you map this through? How does the insurance policy work? They had, I don't know if you call it the contents or tenants insurance. I always mix up the two names. Yeah. But they had like tenants insurance. But then the investor had proper rental property insurance on the property. Yeah. How does that work? It's the tenant's insurance that's going to cover the house burning down?
So it's going to be the landlord's insurance that covers getting that house back to what it was.
And then they sue the tenant's insurance company for the money back.
That's right. Then we call it subrogation.
I was kind of joking, but I'm like, that must be what happened.
So we subrogate. I know there was a question earlier before we got on air here, but just around tenant insurance. So the landlord's insurance does not cover putting that tenant up somewhere, right? It only covers, the lost income. So if the tenant leaves and says, well, I'm not paying rent because there's no house there, we cover that, but there's no coverage for a tenant. That's part of the tenant insurance.
Okay, so step by step here, you covered the rebuild of the house. Yeah. Did you cover lost income on the rent?
Correct. Yeah.
Okay, so you covered lost income on the rent to the investor.
That's right.
So it looked like they were still making money because you guys were paying out the rent.
Yeah, because the bank still wants their mortgage payment. They don't
okay,
care,
so that's all covered. Yeah. Then the tenants had their own insurance, which ended up paying for them because they ended up in a hotel. I think I remember.
Yeah, so they would have been probably a hotel, maybe even paying to rent them another house. Their contents, and then of course the liability coverage that came into play afterwards.
What was the liability? Oh, got it.
For subrogation, right?
Okay, got it.
That's the liability portion of the policy. Okay. When they get sued, right?
Okay, because when they get sued by the insurance company that rebuilt the house, then they can turn to their insurance and defends them in that case.
Correct.
And those things between two insurance companies, because we're seeing one now, it seems to take forever. Oh, but see, the good thing about that is that you're not involved, right? Yeah. You let the insurance company handle it. They go after the other insurance company. That's guys, they make backroom deals or whatever insurance companies do, and they work it all out.
Yeah.
So when you're breaking it down for investors, let's start with a beginner investor, one property. What do you say? How much liability insurance? What kind of insurance do you map out for them?
Yeah. So the number one thing is what is the property for? And I think your model has changed quite a bit, where it's not as much rent to own as when you guys
rent
first
to own's probably. I'm trying to think the quantity percentage wise of rent to own. Right? I got to think it's like 3%, 5%. It's under 10.
I have no idea. Yeah, most investors want to hold on to the properties.
Most of our stuff now, rental, legal second suites, duplexes. Yeah. Some are doing flips, student rental properties.
Yeah. Yeah, so for us, it's making sure it's insured properly, and going back to when you guys first started and we first started was, when I said that, a lot of the investors would call and say, well, I need an owner-occupied policy. Well, that's not what it is, and if there is a loss and the place burns down and you have an owner-occupied policy, well, you may not get paid because it's not the same.
Yeah, I remember when people wanted regular rental insurance on student rental properties because it was a little bit cheaper. So they wouldn't pay the extra for the student rental insurance on a student rental property.
So you're paying for insurance in that case, and you don't have insurance.
That's crazy.
Because the insurance company wouldn't pay.
Okay, so
in a heartbeat. Can you imagine? They would look at that and be like, sorry, you're on your own.
Yeah.
But we know of cases where people were saving $5 or whatever. Well, I can't imagine it was more.
No, it was more than that. Yeah. I mean, student rental insurance can be a little bit pricier, but you just work it into your numbers. But it's crazy not to have the proper insurance.
Okay, so step one, rental property insurance on the property.
Correct.
Then the next thing to look at is what type of coverage? Like, what about liability amount on that insurance?
So we always start with $2 million.
Okay.
And the reason that is that's where lawsuits are, when you go to a lawyer, they're going to assume you have $2 million.
Yeah.
Right.
And the way we got it answered by a lawyer one time was that most lawsuits, I don't even want to use the examples, Nick, that were shared with us because they're just too creepy, but the lawsuits would be anything really in Canada is going to come under $2 million. Yeah. So if you have $2 million, you're covered on the property.
Yeah. But it's more, when I think of, peace of mind when somebody buys a policy, the likelihood of us paying out $2 million, it's probably pretty small. But if you get sued for $2 million and you have $1 million in coverage, you're not going to sleep at night because that extra $1 million is coming out of your pocket, even though the lawsuit may only pay out $150,000.
Sure.
It's that, peace of mind.
We were 1 million early on. So like when we started investing, the standard was still about 1 million, but that changed a long time ago.
Pretty early.
Yeah, I don't think, even 12 years ago, we probably started at 2 for the investors. Yeah.
Okay, so right insurance, then $2 million liability coverage. Then what's the next thing? I'm thinking like sewage backup. Like what are all the things?
Yeah, so there's alternate coverages, and one of the big ones is water, and that's the number one claim in Canada now. It's not fires, it's water.
Water leak in the basement or water pipe
leak in the basement, sewer backups, pipes bursting, freezing. Now, pipes bursting and freezing is part of the standard policy, but I always call it basement water. So basement water is this. You got water in your basement, and you have no idea where it's coming from. Is it coming from the sewer? Is there a crack in the foundation? So, anytime there's a, in-law suites or, a finished basement and you've got bedrooms down there, we always recommend that coverage. But depending on the area, some areas it's quite affordable. Other areas where there's more losses, it can be a little more expensive. So the investor has to make that choice is, okay, do I want to spend the extra $20 or $15 or whatever it is to have that coverage, or am I going to take the risk myself?
Is that how you guys quote it out? You have your analysis of where you're getting these claims and where you're not?
Yeah.
Got it. Okay. Because I know older areas, like if you go into, like in Mississauga, I guess when we were growing up there, it was a lot of new subdivision stuff. There was like the trees were all planted new in the subdivisions. The roots weren't really deep. Yeah. There wasn't a lot of sewer backups. Nick and I started buying rental properties in Hamilton. These trees are really old and the piping there is a little bit older. Sure. They're ripping right through some of these pipes and there's sewage backups. And one of the guys we hired is like, oh, you guys are going to get this all the time. And that was like shocking to us. We had no concept of that. So you're mapping it out to see whether it's worth it to get the insurance in a particular area. Yeah. I tell everyone now, just get anything to do with water, just get the coverage.
Yeah, and you can get as low as $10,000 in coverage. So you don't need,
You said the pipe bursting is a regular policy, but what if someone leaves the property? Let's say they go on vacation for 2 weeks. Like, so if I went on vacation in December or whatever, let's pretend borders are open and I'm traveling all around the world freely. Yeah. No masks or hand sanitizers or anything. I'm just gallivanting around the world. But I don't tell anyone. So for 2 weeks, and something happens, but the toilet overflows, a pipe bursts, whatever. Is it covered? Because isn't there a period of time that if I'm out of the house and I actually haven't notified you guys, that they're going to say, hey, you should have actually told us and we're not going to cover you?
Yeah. So typically it's 30 days, right? Okay. So that's for investment properties as well as homeowners. So in a 2 week situation. No, so long as you didn't do anything purposeful before you left, then you're gonna have coverage.
Provided it was an insurance
insurance
scam.
That's right.
Okay.
Is that what you meant?
There's no fraud.
Not at all.
Good.
No.
Oh, insurance. It wasn't purposeful. It wasn't an insurance scam. Yeah. I need the English scam language. I can't understand the purposeful. I didn't understand. What do you mean purposeful? So someone's pulling an insurance scam, like trying to flood their...
Yeah, they leave the tub running.
Look at the way he dresses. Look at the way we dress.
Yeah, no, it's true. It is very different. You're looking good, dude.
You got to take the jacket off. We got to cut the sleeves off that shirt, and then you can be here. Then you fit right in.
Okay, so someone leaves. I didn't even think about that, but someone's trying to get a free finished basement. They leave the tub running, destroy the basement, and the insurance covers it. Got it. Okay.
Yeah. But going back 30 days is typically...
Okay. And what do you have to do in that case? So let's say I was going for 5 weeks. So then what do I have to do? I just have to call the insurance company and say, hey, just so you know.
Yeah, so every company's going to be different. In our situation, we look at each situation different. But as a homeowner, if you've got somebody coming and checking on it regularly, then we'll just make a note on the file. Okay, that you're going away for 4 or 5 weeks.
But I don't want my brother in my house. So I'm going to be like, don't even go close to my house while I'm gone.
Yeah, then we might, at 5-6 weeks, you might get a vacancy endorsement on your policy.
So you just pay a little bit extra or something like that?
Well, it really depends. So in some situations, the vacancy endorsement will, depending on why it's vacant. So it could be, vacation is different than, tenants moved out.
Okay, so let's move it over to the investor side then. So the tenants move out.
Yeah.
going to do renovations, but I'm not going to start for a month or something. Like, what do I do?
Yeah. So
How
if
do I
it's
protect it?
tenants moved out, we're going to start in a couple of months some renovations. Then it's going to be a straight vacancy endorsement. So you lose a little bit of coverage. So, that basement water coverage is going to go away. And then the coverage for the dwelling decreases. It doesn't decrease by much, but you get a bit of a decrease there. There is a cost, but because you're removing some coverage, there may not be a fee at all to do that. Okay. But, if it's, a case of right away, we're going to be in there every day doing work. Well, then we may not even look at adding the vacancy endorsement. Okay. We'll just add a note.
What if there's a fire while, so we haven't started the renovations. I'm getting quotes, so I'm only going there once every 2 weeks to get quotes with these contractors because they're backed up. Yep. And there's a fire while the place is vacant. Do the insurance companies cover that or without, I haven't notified you of anything?
Well, it depends on how long it's been vacant.
Right? Let's say within the 30 days. Within 30 days, then it's covered.
So, if it's day 27, you've got 30 days to notify.
But if you're over 4 weeks now or over 30 days.
38,
it's
technically the insurance company can say.
What do you mean technically? Because then that comes to someone like yourself fighting for your insured person.
It could be that, hey, they COVID hit and they couldn't do whatever.
Got it. Okay, so then the negotiation begins.
Yes, exactly.
Okay. Yeah. Okay, got it. And that the same applies for somebody breaking in. I own a rental property. It goes vacant. Somebody breaks in within 30 days and causes damage. That's covered?
Yeah.
Okay, but then at the 38-day mark, I have not let you know. Then it's like, oh, here we go.
Yeah.
Okay, but if I let you know to Nick's point, it's covered.
Yeah, and again, you're going to lose some coverage, like the water coverage.
Yeah, that's
if you
fine.
have notified, but
Okay.
Yeah, that's no big. If the water leaks and you're doing renovations and you got to fix the basement, that's one thing. I mean, but if the house burns down, that's a whole other.
What about one last thing? What about if it's vacant? We have a really cold November, pipes freeze and burst, flood the basement, but I have coverage. It's within 30 days. So now I'm covered.
Yeah, and there might be a bit of pushback, like, hey, was somebody checking on the property?
We've had within 30 days, I don't have 30
to check. Days. Yeah, we've had situations where somebody's home has been vacant for, say, 90 days. They haven't been to the property.
Yeah,
we know
those situations.
The exact same situation happened. Well, there's no coverage. And going back to when we talk to investors, especially first investors, is this is a big investment. You're spending, what are homes going for now?
We're talking $500,000.
It's $500,000. Like, you should really be checking on this place.
Yeah.
Don't just buy it and just hope that everything's going to run smoothly. Like, give a drive-by every few months. Just, because typically on the outside, you can tell what's going on the inside. So if it looks rough on the outside.
Do I get any benefits from insurance if I have professional property management, or no? That's kind of like a wash on a.
We just want to know that somebody is checking on it.
Okay.
Right. So, and ours is, we ask the question, is somebody checking on this property twice a year?
Okay. And what about the 30-day mark? If it's a property manager checking on the property, that's fine as well? You know how you said with 30 days, if it's vacant for 30 days, I don't have to let you know.
So if it's vacant, but then you have a property manager checking on it, it's vacant for 6 months, and it's just a property manager checking on it, that's still considered a vacant property.
Okay.
Because somebody's not living in it, right?
Okay.
Because if you have a property manager checking on it every 3-5 days, a lot can happen in 3 to 5 days versus if somebody's living there.
Got it. Right. Okay. What other policies do you offer? If I'm scared of not collecting rent and in this market, we have no vacancies, by the way. Yeah. Like a property goes vacant, a new tenant.
Yeah, I was surprised by that when I reached out to you guys early on and you're like, no vacancy. Yeah.
Well, I mean, when you tell the country to shelter in place, people then trying to find places to shelter and there are no vacancies. And when they can't hang out at work, there are literally no we are seeing strong, unless a property's overpriced or someone's really trying to get a high price for a certain property. If you're asking the right price at the right home, there's almost lineups to get places.
I saw a poll today that said the number of people looking to hope to own the home within the next year has doubled from this time last year.
Really?
Right. So that's where demand. Now it's a poll. Yeah. So I mean, who knows where they did it last year versus this year? So a lot of it could be BS, but it's just the sentiment out there is that there's interest for sure.
Yeah. Well, and I think I don't know if this is North America wide, but at least as Canadians watching Americans, we think populated city centers have more violence than they've had in the last few years. Mm-hmm. So you combine a lot of factors here. You think, okay, maybe do people want to get further out of the city than they ever had before? Our interest rates at historic lows. Mm-hmm. In Canada, do we still have people, even though our immigration is lower? Nick and I were just talking about how we're seeing some foreign-born IT workers ask if they can transfer up to Toronto.
Really?
And we're seeing it happen. Mike just rented out a property in Oakville here, and that's what it was.
Oh, really?
Foreign-born U.S. IT worker with a Mississauga office transfers up here and then rents out a place. Wow. So we're not technically not getting new immigration, but we're getting some other new demand that we didn't really see before. So you got all these factors playing in, and then anyone who wants to get the home that they really want to be locked down in, they're making the move now. Because everyone's scared that there's going to be a second wave and they're going to be stuck at home. Like, I don't know how you guys handled it, but I'm sure everyone was like doing home projects, or you got, getting a new keyboard for the house, a guitar, ping pong table, whatever it was. Our neighbors couldn't get a basketball net for their front, the ones that sit on the driveways.
Yeah.
They were like out of stock everywhere.
Oh, yeah.
For months.
Yeah, we deal with a lot of like motorcycle dealerships, like ATVs. That you can't buy that stuff. Because people...
Everyone's like, screw it, I'm going to have fun.
Yeah, hey.
If the world's going down, I'm going to have fun while it goes down.
Yeah.
So back to the rental property stuff, the vacancies. Do you offer insurance if I'm like, you know what, I'm just scared that I'm going to have some vacancies and I want to insure my rent? That you can't
No,
do.
so we talking about, like somebody just skips out and I've got 6 months of no rent?
No, not no rent. Going forward.
Yeah.
I can have 3 months until I fill the property with a new tenant. Can you cover me for that? Can I insure against that?
Yeah, we don't offer that. I know there are things out in the market there for...
there are. I have seen some of them. Okay, and then what about damage on the property by the tenant?
Yeah. So we don't cover intentional, like vandalism, but going back to the situation of, that tenant doing some renovations on the home and they cause that damage, that's not intentional. So there's certainly coverage for that.
Okay, got it. Okay. So then after that, then it's pretty basic. Regular rental insurance. You decide what options what you want to pay for, what you're not going to pay for.
Yeah.
Then it's deciding to pay annually or monthly. I don't know. You guys just do it annually?
Yeah, most people go monthly because there's no cost associated with it.
There's no difference.
No difference at all.
So pay monthly.
Yeah.
One insurance company I was dealing with for my cars mandated that we had to go with them monthly on a Visa card.
Yeah, I have the same one.
So
I couldn't pay annual. I had to go monthly, and it had to be on a credit card.
Yeah, so not knowing why they do it, but I actually don't like when people pay annual, and the reason is you get it in the mail, it sits on the counter, and you forget, and then my office is having to reach out to get a payment. Not to say that you would do that, but I find with annual payment, people often will forget that they need to make a payment. Now we've got a policy that's lapsed. We have to rewrite it. With a monthly, the money just keeps coming out.
My biggest confusion, and I'm sure you just laugh at this, but my biggest confusion with insurance policies is always that the invoice doesn't tell you what the policy's for. And we have a few.
Some of them do. The property ones do. From your office, the property ones do. I think with your office.
But critical illness, disability, they all just say like, "There's an invoice. Here's how much it's due."
How many times have we emailed you every year, Todd? What the hell is this for?
Oh yeah.
Yeah, and I'm sure
we've got on our life business, we've got some work to do on our
it's not just you guys though. I feel like it's every
company
out there with
these
policies. You just get this invoice.
What is
this again?
Yeah.
Yeah, got it. Okay. And then what mistakes do you see investors making on insurance? Are you seeing any obvious stuff regularly?
I think the biggest thing is if there's any kind of a change going on in the property, call us. So going, vacancy. I'm changing it to a duplex. I'm going to make it a student rental.
We just had an oil furnace changed over to a gas one.
Oh, absolutely.
And same thing. I just sent a quick email saying, "Hey, I don't know. You guys probably need to know this.
Yep.
Here you go."
Mm-hmm. Yeah.
Right. Just stuff like that.
Yeah. Just to be said, hey, we put a new deck. A lot of it's not going to change the premium. It's not going to change.
Oh,
the
I'm
policy.
not doing that. Then you guys are going to up the policy. Not that one.
It's fun.
Anything where I think the policy is going to go down. I tell you guys. Anything else? No, forget about it.
Yeah.
Okay. And then what are the mistakes on claims people do? Like, for example, it's high winds, 3 shingles blow off the roof. Is it worth it to make the claim or not?
Yeah. So, we'll often, and most of the time we're quoting $1,000, $2,000, $3,000 deductibles. And again, the client's choosing. But, when they call in, we'll often either say, hey, get an estimate, or, hey, we can send out one of our preferred partners. There's no cost to do that. And then decide if you want to make a claim.
Okay. So let's say, because I'm curious about this. So let's say there was some wind damage.
Yeah.
We'll use the roof as an example. And they put in a claim. Yep. And they had a $2,000 deductible. It was a $5,000 job. So they're like, yeah, sure, I'm going to use my insurance.
Sure.
How does that impact them going forward? Like that is now a claim under their home insurance. Do you guys keep track of that similar to like car insurance, whereas you have multiple claims?
Yep.
Yeah. So how much does that impact them? And when does it make sense? Because we screwed up totally. Like at our parents' house, this big tree fell over. I went there. I don't know where the hell you were, but you got lucky. I had to rent chainsaws, went cutting this thing, trying to rip the roots out. It was a big disaster it was a full day job. And someone's like, why didn't you call the insurance company? I'm like, damn it. I didn't even think about it.
Yeah.
So
but how much damage was it?
It was, it doesn't matter. It was my labor. My labor is very expensive. My labor is at least worth $10,000. Yeah. So no, I don't know, but it was, but anyways, so.
Yeah. Ultimately it's the client's choice what they want to do. So, $2,000 deductible, $5,000 in damage. Hey, we'll pay $3,000 if you.
But what's the impact on me long term?
Yeah. So the impact on that property, they're likely going to see a rate increase, probably 10 to 20%. Okay, because they're going to lose a claims-free discount.
10 to 20%?
Yeah.
For how long?
Todd's backpedaling. He's backpedaling.
So it'll last for a few years.
For a few years. So if I pay $5,000,
but that's not the biggest. $5,000 would be a large premium. So
so it's got to be like a $10,000.
Yeah.
Is it a large premium? Because what do you pay for?
$5,000 per premium is a lot. But let's say you're paying $1,200. So ultimately, okay, well,
$1,200. You pay more than $1,200 for home insurance, don't you?
Well, I'm just to make the numbers easy.
Okay.
So if it's
you're not paying that much more than $1,200 though.
If it's a 20% rate increase, so it's really okay. So really for $240 over 3, I'm going to put that claim in. The issue is, well, what if you now have another claim next year? Now all of a sudden your insurance company might look at dropping you. Or saying, hey, we're going to insure you, but we're going to take out this coverage, or we're going to force you to take a $10,000 deductible.
Even if does it matter if they're weather related? So like it was obvious there was a windstorm and it was like a weather related thing versus someone accidentally did renovations and lit the house on fire. Do they differentiate?
Yeah, so there will be certain claims that are rateable and not rateable. I won't go through all those with you, but yeah, there are situations like, well, this is completely out of the control. It was a catastrophe. So we used to have what we called catastrophic events, where it's like, well, thousands and thousands of people are affected by this, so it can't be a rateable claim.
Okay.
And then if an insurance company kicks us out for some reason because of too many claims, but it's like two claims. If they kick you out for that, does the next insurance company have visibility into that?
Yeah, so they may or may not have visibility, but they're going to ask that question.
Oh, got it.
Have you had claims on this property in the last number of years? And if you say no, well, now all of a sudden you're lying.
Yeah. My first question was like, well, if you don't tell them, but then then when they find out after, if you have a claim afterwards and they find out you lied during that period, then they have an out to not cover you, right? Yeah, I got you.
Yeah. So I mean, we're never going to steer somebody from not making a claim. Ultimately, it's their choice. But if somebody, if the delta is $700, would you really want that on your record? Right.
You know what? I always think insurance is the best business in the world. But wasn't it like a few years ago you were trying to tell me that insurance is really bad and there's so many claims right now because of like weather patterns or wind or flooding?
Yeah. So 2018 was for everybody.
I think you were just coming in to try and tell us why all our rates were going up and you had some pocket excuse.
Sure. Yeah. But yeah, I mean, the issue with, we talk about home insurance or rentals or any type of fire insurance, it's weather dependent. So if we have a really bad couple of years, then what happens? Everybody's rates go up. So 2018, I can't remember it was, what was paid out in that year was the same amount that was paid out the prior 10 years in the industry. I think that's what the numbers are in claims. So what has to happen? Well, rates have to go up. But if there's a few years of, okay, things are stable, then now maybe rates come down or they don't rise. It's the same with car insurance right now. Car insurance has gone up. It was down. Remember, it was mandated down 15% maybe 5 years ago.
I don't remember, no.
But now it costs more to fix a car. A bumper that doesn't look like much. Well, it's got beepers and sensors. It's $3,000. It doesn't look like a hell of a lot. And the other thing too is this distracted driving.
Yeah, that's the big one.
It's huge, right? And it's not even just phones; it's the infotainment systems in cars.
When that first came out, that whole new that law about distracted driving, because we used to hold our cell phones.
Yeah.
About a month after it came out, I was listening to a podcast. And I picked up my phone to launch the podcast and I couldn't hear it.
Yeah.
I didn't have Bluetooth on the car or whatever. And I was holding it next to my ear while I was driving. And a cop sees me on the QEW, and rightly so, he pulls me over.
Sure.
And he's like, hey, you were on your phone. I got to give you this ticket. I'm like, listen, just for the record, I wasn't on my phone. I was listening to a podcast. And that's why I'm getting the ticket. He could care less.
But, there was a video that was online just, I don't know, last week. It was 3 guys in a Tesla. No one in the driver's seat. 3 young guys, and the music was cranked. They were partying. They had drinks. I'm not saying alcoholic drinks. I don't know if they were energy drinks or whatever. They were drinking some stuff, and they were taking a video and they posted it online. And the damn car is going down the highway, right, driving, and there's no one in the driver's seat. And I'm just looking at it. I'm like, these guys are. I mean, look, I know the things can drive themselves, but that's a lot of trust, man, to put in that especially with all the accidents.
The insurance companies must be freaking out on this self-driving stuff.
Yeah, I mean, there's certainly some discussion. Again, it's certainly above me, but is who's going to be the insurer down the road? So in 20 years, is Tesla the insurer? Are they insuring if the car gets into an accident, if they're the one in charge of,
It depends.
right.
Who knows? The insurance company might be happier depending on the way those. However,
it might get better.
Up,
Maybe
right?
it'll be a case of, hey, there's with all this technology that insurance rates go down,
But right now, there's no way they want to insure those things.
No.
I guess I'm probably kind of, I probably see it more often because it's not in a lot of mainstream stuff, but number of Teslas, you guys see them too. Like you probably see in that industry, you probably see them too, that these Teslas decide to smash into things while no one's paying attention.
Yeah.
So when someone's reaching out to get insurance for a rental property, are there any questions they should be asking? Like obviously they can reach out to your office and we're going to give you your contact information, but for whatever reason they're not. They're in a part of Canada, they can't, they don't know, they're not going to reach out to you. Is there something that you could just suggest that they always ask that people don't ask? Is it like response times on the claims or something? Like what is it that's different?
In what sense?
Like if someone's going to call a different, an insurance company about rental property insurance, what's like the one or two things they should always ask about the insurance before getting it?
Going back to your rental income question, because I have seen stripped down policies out there where that is not covered. So, again, the house burns down. Mortgage company doesn't care. There's no house there. They still want to get paid. So
okay, got it. So you see some policies with replacement.
Yeah, because we will get people will say, well, this is yours is a little more expensive. This one's cheaper. That is one thing I have seen stripped out. Going back to the water coverage, there are some companies that don't offer that. Like we didn't offer that 10 years ago either. That's just.
Sorry, I was going to, because I think that's an important point that I didn't realize at first too, that certain companies, if you guys have higher a number of claims, even by chance, if you maybe you have more policies in that area, so you have a higher number of claims in that area, so your rates could be slightly higher.
Sure.
So like when people call around and they're just worried about the absolute lowest rate, and that ranges because next year yours could be lower because you might have a lower number of claims. Yeah. Which is kind of like there's all these kind of weird things to these rates that as the consumer, you don't really understand that type of stuff because it doesn't matter to you. You just think, well, that company's more expensive and you don't realize how it works, right?
Yeah, and it's cyclical, right? So, are we always the most competitive in any category, whether it be car, home, life? No, we aren't. But next year we might be, and then the following year we might be the third most competitive. So, it's really the long-term picture of, okay, well, geez, you've been the most expensive in the market for 10 years. Well, yeah, rightly so. You should leave. But no matter where you go, and this is what we tell clients when they're looking at shopping around, hey, please do. But no matter where you go, if, it's ABC company this year, I guarantee it, I'll put money on it that next year somebody else will be the most competitive.
Yeah, got it.
It's just the way it is. And, we don't write, and I think I told your team a number of months ago when I was in to see you guys, like we don't write every person that calls us. As a company, we don't want that. We don't want to write 100% of the people that call the office. On the auto side, we probably write maybe 30% of the people that call. Higher on the fire side for home and renters. But, we, as an insurance company, you don't want to have everything because you go to an area and something happens and you insure all the homes. Well, what's going to happen? Everybody else's rates are going to go up.
The other thing I wasn't aware of is that for rental properties, if a house is all brick versus siding versus partially siding, that changes the rate. And I only came to be aware of that when some investors were price shopping around and they realized that an all brick home is going to be a little cheaper than an all siding home.
So typically we used to be there was a huge delta between brick and siding.
So that's different now.
Well, I wouldn't say it's different. It's not as significant as it used to be. Siding's just more susceptible to things. It's susceptible to water, to wind. Whereas, brick. It's
as the customer, I didn't even assume that though. I'm like, I don't know. It's a single family house, just insurance. Give me the best price.
Yeah. Which,
it's an afterthought for with the investing and stuff. For me, the insurance is always just an afterthought. Like I'm like, I know I need it, just whatever. Just give me the insurance and that's it. Yeah. And I'm not saying it's right. I'm just saying that's where it always was for me.
Yeah, no, it is always. It's funny. We deal with some other like mortgage brokers, lawyers, real estate agents that way, and they're all like, yeah, geez, I've got an inspector I work with, and I've got a lawyer I work with, but we don't ever really think of insurance. I'm like, well, you can't close on a home without insurance.
Yeah.
But,
and then what about umbrella policies? Do you guys do that kind of stuff? I feel like a lot of investors are always looking for these umbrella policies where they cut coverage on multiple homes. Do you guys do that?
So there's maybe help me understand what you mean by umbrella. So
like they'll get one policy and it'll cover three properties,
locations,
and they're paying for $2 million liability, but it's not $2 million liability per property. It's $2 million liability for the policy.
Yeah.
So that if one thing happens on one property, they're covered at $2 million. But if they had three claims all at $2 million on each property, they're kind of screwed.
Yeah. So, I mean, you call that an umbrella. I mean, ultimately, they're paying for it in each property. It just doesn't look like that on the paperwork.
Yeah, is that what's happening?
Yeah. I mean,
okay.
The company knows you've got 3 properties. They're going to charge you a premium based on 3 properties. So we typically do it as what we call our personal lines, but we can also do rental properties in our commercial lines where it's all it is all the properties are on one policy. So it sounds to me like that's what you're talking about when it's an umbrella.
Well, the only difference here is that if you had 2 claims in 1 year and it exceeded 2 million, so you literally have 2 million worth of liability, not 2 million per property. So if 2 houses burnt down,
so we're talking about the aggregate amount of liability.
Yeah,
we don't.
So
we don't have an aggregate on a commercial policy.
better.
We don't have an aggregate. We used to be, if you had 2 million in liability, your aggregate was 4. Now on a commercial policy, if your liability limit is 2 million, we're not going to lock you down after you hit 4.
Yeah, got it.
Right?
Got it. Yeah. And I think we've told everyone from everything we've seen, it's always best if you want $2 million liability, get individual policies per property. Don't try and do all this thing under one policy. It just gets way too complicated.
Yeah, now there is something what we call an umbrella. So let's say, Tom, you've got 2 cars, a house, and 3 rental properties. You can buy extra liability that will sit on top of all of those. So that's what we call, when you say umbrella, that's what I see as an umbrella.
And sorry, what's that doing?
It's just giving you extra liability on everything you own and you insure with us.
Got it.
So, let's say you're 2 cars, home, and three properties. Let's say they're at $1 million. You haven't looked at it in 12 years and it's at $1 million. Rather than adding $1 million to each property, one, it's cheaper by getting this umbrella policy and sitting it on top, but it just gives you a little bit better coverage.
Okay, so it's
or you can make it $2 million, so now you've got $3 million.
Yeah, got it. Yeah. Got it. Okay, and you have people doing that.
Yep.
Yeah. Okay.
Yeah.
Okay. When you were going to quit, was there any books or anything what were you listening to, or what books had a big impact on you?
You know what? It's funny. I'm rereading and I'm doing a better job, and I've probably read them. I don't know how many times, but I just finished again. How to Make Friends. What is it?
How to Make Friends and Influence People.
And Influence People.
Dale Carnegie.
Yeah.
How is it rereading it now? I haven't read it in a bunch of years. Is the English too old?
No. No, and maybe mine's an updated copy that I have, and I've lent it out so many times. I've had to buy these books. I don't know how many times I've had to buy. So that one I just reread, and I don't know if the last time you read it, but he says, okay, read a chapter, then go back and read it again. And then what I would do, I would highlight, and then what I've now started doing is I have a book where I make notes on the books I've read, because it's always hard to remember, to consolidate, everything in one spot. So now I have this book. So just reread that, and then the other one I'm reading again right now, and this is probably the 5th or 6th time, is Napoleon Hill.
Think and Grow Rich.
Think and Grow Rich. So,
are you sure you're reading these books? Because I'm giving you the titles.
details, Tom. So doing the same with that one. And then what I honestly do is I'll read a business book, and then I read a fiction. I'll read a crime novel or something just to mix it up.
Yeah, cool. I think I need to read more fiction.
Yeah.
Just kind of break. When I was reading a tiny little bit of fiction, I found it was just very freeing. It was relaxing for my brain. Most of the reading I do is nonfiction, and it's kind of heavy.
I read Peppa Pig stories to my daughter, so I mean, I'm well versed in the fiction.
I'm rereading The Sovereign Individual. Did you ever read that book?
No.
It was published in 1997. It's freaky. In the first chapter, it talks about a cyber currency coming out in the next 20 years and how that cyber currency will give independence to people, and governments will try to thwart the cyber currency with more and more aggressive measures. We just heard that India today is thinking about passing a law to outlaw crypto trading in India.
Oh, really?
And I'm reading this book. It was written 20 years ago, and it's like everything they are saying is coming true. Yeah. Sovereign Individual. Have you heard of this book?
I think I have. I haven't read it.
It's great. It's a great read.
Okay.
It seems like all of it's coming true right now. That and The Fourth Turning, that other book that I kind of mentioned. Todd, thanks for doing this, man. If someone wants to reach out to you, how do they find you?
So we've got 2 offices, one in Cambridge and Guelph, but I'll just give you one website. So it's insurancetodd.com. So 2 D's in Todd. It's not Ted. InsuranceTodd.com.
InsuranceTodd.com.
Yeah.
I got it. I know you're Todd.
That's the
Ted
easiest
was
way.
a little slip, dude.
Yeah.
Had a bit of tequila on the weekend, man. It was an honest little slip. InsuranceTodd with 2 D's.com.
Yeah, or just Google Todd O'Donnell Insurance. It'll come up. Either office will come up. And we got 12 people working for us.
And you don't have to, and I should say this for investors, because you've dealt with a lot of investors over the years, your properties don't have to be in Cambridge or Guelph to get them insured.
No.
You're insuring properties all over the GTA.
Ontario. Yeah. Yeah.
Condos too?
Condos. Yeah. Rental condos. Yeah.
And we didn't talk about automobile and stuff, but you're doing all of it.
Yeah.
InsuranceTodd.com. Dude, thank you.
Thanks, guys, for having me. Appreciate it.
Hey everyone, so hopefully you enjoyed that episode with Todd O'Donnell. Great guy, very thankful to have crossed paths with him. He has helped a lot of Rockstar Inner Circle members get insurance on their properties. So just grateful that he's been able to help us so much. And if you are listening to this and if you want to become a Rockstar Inner Circle member yourself, you can find all the benefits at rockstarinnercircle.com/member. That's rockstarinnercircle.com/member. And with the code YLYT, you can save $200 off joining up as a Rockstar Inner Circle member. That's it for now. Until next time, your life, your terms.